Okay. All right, guys. So what we're going to be doing here is we're just going to be going over candlesticks, and then we're going to go a little bit into how we trade them. And yeah, so we're going to start here. Okay, cool. So making sure everybody can see my screen. Let me know if you can't, but yeah, we're good to go. So obviously we're going to be covering candlesticks today. We're going to be focused on I'm going to go over the complete basics so everybody's on the same page, and then we're going to go from there. So first of all, first thing I want to note is we got bullish and bearish candlesticks. Bullish candlesticks are green, bearish candlesticks are red. I'm not going to spend too much time on this, but basically this is exactly how they work. There's the open price on the green candles, which is the lower part of this body here. So this is considered the body of the candle. This is the body of the candle. And so when price goes down, it'll show a red candle and have an open price, a closed price. And then these wicks will show how low the price actually went and how high the price went. So that's basically what these things are showing here. So bullish candlesticks mean the price is going up over that period of time. Bearish shows that they're going down over that period of time. So if you need more context on that, I guess Google it, but this is basically how it works. I don't want to spend too much time on that. So next thing we want to talk about is there's a ton of candlestick patterns. There's a ton of chart patterns that people will use and try to get you to use, and they're really not too necessary. Like the main things you want to focus on is seeing how price moves and how price reacts within these things. And so basically we want to see how these react when it comes to support and resistance. So like these candlestick patterns only really matter when we're looking at support and resistance. And if you don't know what support and resistance is, go look at the first video and the second video that I posted in the webinar recordings tab. But so what we're going to be looking at here is there's the bullish patterns and then bearish patterns. These will kind of just give you an idea of like what's going on within the candlestick. So basically ranking these from most bullish to least bullish. And this will just give you an idea of, okay, were buyers stepping in, which means prices going up a ton, prices shooting up. That means a lot of buyers are stepping in during this candlestick. And then here you can see price was driven down and then was pressed right back up and ended up green. So that means basically sellers pushed it down and then buyers just bought it right back up and it didn't even matter. Normal bullish is just a green candle. Neutral bullish, this is really just neutral in general. This basically means sellers pushed it down, buyers pushed it up, but ultimately it closed flat. So that's the same thing here. They pushed it up, pushed it down, and it ultimately closed flat. Nobody was in control technically when it comes to buyers and sellers. And then there's the least bearish, which least bearish, this would be basically buyers push the price up, push it up, push it up, push it up, and then basically sellers just drove the price right back down. So that means that sellers were obviously in more control because price went all the way up here and ended up actually making it go down in the long term or over the length of the full candle closing. So there's certain patterns that you'll see that correlate with each of these things. And so we'll be going over each of these, but like it's not important to know the names of them and what they are. It's just important to know, okay, that's what this means. Like the buyers fully stepped in on this candle. Okay, sellers tried to push it down and now buyers pushed it straight back up. And so obviously sellers are not in control. And then here, buyers are obviously in control. Here, there's some indecision. We got to wait and see what happens here. We don't really know who's in control right now. Same thing for here. Least bullish, it means that it's not very bullish. Like I would consider this more so a bearish candlestick pattern because the seller, well, it technically is, but we'll get into that. But basically just understand the concept of buyers and sellers and how they can push up and push down the prices, and they can drive how the prices move. So like knowing names like bullish engulfing, three white soldiers, blah, 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 all these things, it's not as important as understanding how price moved within this candle. So for example, this, we'll go over these real quick, but it's the same concept, just opposite. Bearish, this means most bearish, this means sellers were in full control, like there's no wicks, it just price went straight down. As soon as the candle opened to when it closed, price pretty much went straight down. Here, basically, buyers drove the price up, but then sellers completely stepped in and overtook the entire candle and made it finish or close red. So just understand that concept of buyers pushing it up, sellers completely taking over the buyers and just pushing the price completely down. This just means price is headed down. There's nothing really to that. It's obviously a red candle, but concept still there. Here, this is just neutral. And then for here, this is a bullish candlestick pattern, in my opinion. This is considered to be a hammer candle, which we'll get into in a second. But basically, buyers or sellers pushed the price down, and then buyers bought it right back up and had it close. So we'll find examples of each, but that's basically a concept that we want to get across. Like, for example, this is the same concept as this here. It may be green, but it's more important to understand how price reacted to it rather than trying to know the name of the candlestick. Like you can see here, sellers pushed the price down, right? And then buyers bought it right back up. And then look at how nice of a move we had from there. We had a move, even if you would have bought at the close, 253, all the way up to ultimately 328. So that's the whole point of this. So that's what you want to pay attention to and recognize is the characteristics of the candlestick and not the names and all that stuff that these Instagram gurus and people will try to teach you. That's not as important. It's understanding the context behind the candle and understanding the characteristics. So that's one part. This one was completely invalidated just because I had earnings. So that wouldn't have been something you'd want to play. But okay, staying on track. So these are the things you want to pay attention to. So for example, this is a hammer candle. This is probably my favorite type of candle, which is this same type here. Bullish candlestick pattern. Basically, sellers drove the price down and pushed it right back up. All of these things that I have here, oh, dang it. I forgot to record this. That's not good. Oh wait, I think it automatically records. Never mind. We're good. Okay. So anyways, basically sellers push the price down and then ultimately push it back up. Okay. Thank you for letting me know that. That's good. I had a little bit of freak out moment there. Okay, cool. So yeah, basically sellers push it down, buyers bought it right back up, and that's an extremely bullish sign in my opinion. This is considered an inverted hammer. Like all of these patterns here, you'll be able to find on Google. Just Google it, candlestick patterns. But the ones that actually will matter are, in my opinion, are the hammer candle, inverse hammer, the bullish engulfing. This basically just means this is the opposite of this, but it's still considered a bullish pattern. And then this basically means that the green candle completely engulfs the previous candle. So it means it's way bigger than the previous candle. So for example, one of the reasons I took Starbucks, one of the reasons is this was a completely bullish engulfing or bearish engulfing candle. So that would be considered let's see, where is it? This candle here completely engulfs the other candle. So this is an example of that here. So basically engulfing the entire candle and taking up that entire previous candle and breaking it down. Next, piercing line. I personally don't use this one. Morning star, I do use this one. I tend to like this pattern. Basically, it's just a doji candle, which is these neutral candles, followed by a bullish candle. So maybe this here or this here, one of these two candles here. So just a side note, I know on Thinkorswim they have a like indicators where where you can add to your charts that it will put an arrow whenever one of these patterns shows up, and you can add whichever ones you want. So it's kind of like a cheat sheet or a cheat code kind of to just like automatically show it. Like for example, it would have an arrow showing right here if you had bullish or bearish engulfing on here. So, and it would show that this candle is a candlestick pattern. So that's something that you could use on top Thinkorswim. I think they have it as well on TradingView if you use that. I don't personally use them. I think it's better to recognize them on your own and understand the context. But for now, I think will help you recognize them for sure. 3 white soldiers, don't use that as much. Hanging man, I do like this candlestick pattern a lot. I think it's very useful. Basically, it contradicts these, or the concept of these, but the most important thing you want to pay attention to is honestly, like, this isn't my favorite candlestick pattern, but I will use it. It just adds to my confirmation, basically. This wouldn't be a reason I would take a trade, but it would be added confirmation as to why I would take a trade. Now, this candlestick, the shooting star or the hammer, these two candles could be one of the primary reasons why I take a trade, because of this concept here, where buyers pushed it up and sellers completely took over and just pushed it straight down. And then vice versa, sellers pushed it down and completely pushed it back up. So that's something that I find very important and relevant, like when I'm understanding the characteristics of a candlestick. So let me know if stuff isn't making sense. What is the time frame of this chart? This is the day chart. So this is just a regular day chart. But yeah, so hanging man, shooting star, bearish engulfing. All of this is just going to take practice of having this somewhere handy. So then when you're looking at charts and you might think you see something, just pull this out and just look at it, look it over. And basically it's just going to take repetition and practice. That's all this is. You just got to try to figure it out and memorize these patterns. There's only a few that I think really matter. The hammer, inverted hammer, bullish engulfing, morning star for these. So there's 4 here, and then hanging man, shooting star, bearish engulfing, evening star, and those are really the only ones I use. So those are really the only 3 or 4 for each. So, and basically they're pretty much the same, just opposites. So you would look for these at support. So like if you are looking for, so for example, this would be something at support. Just stick with me here. This would be considered. So say you had a support line drawn, right? And you think that the stock is going to go up, but the only reason you would take this trade is because it's at support. You would not take this trade just because it has a hammer. You do not want to take trades just because you see a candlestick pattern. That's not how you want to trade. You want to trade when it comes to a support and you see a candlestick pattern, then that's the trade that you would want to take. So like, for example, shooting star. Here's an example of shooting star, right? Here's a shooting star at resistance. Same concept, but it's at resistance. That's the only reason I'd want to take this trade. So all of this needs to play in context of support and resistance. And like I said, if you don't know what support and resistance is, just go watch the first couple videos that I posted in the webinar recordings tab. And yeah, that's this whole concept. So you need to understand support and resistance, and then how basically you just want to understand these here, how they react to support and resistance. So these candles here, you would want to look for these at resistance and these at support. You don't need to know all this stuff. You can learn it. It's added extra to make you better at trading. But the whole point is you want to know here, you want to see these at support and these at resistance. So here's two examples. So for example, the ones that I just went over. So for example, hammer candle, or this candle here, second most bullish. You don't even need to know the name. Here's an example here. At support and broke upside because it was at support. Okay, so here's another example. Most bearish, this was at resistance and broke down. Okay, so now look at the move it had after. So it was at resistance, had this candlestick pattern, and then look at the move it had down. That's how you want to look at these. So you took Starbucks puts because of the bearish engulfing. No. So I will never take a trade because of one reason. So I will probably have close to 8 reasons pretty much. I see pretty consistently. I have about 8 reasons to every trade that I take. So for example, I'll go over this real quick, but this is what we have. We have a head and shoulders pattern here. Boom. Boom. There's a head and shoulders pattern. Let me know if you don't see this. But yeah, this is a head and shoulders pattern. It might be easier to see on the 1 hour, but it's pretty clear. Shoulder, head, shoulder. And then basically what I'm looking for, or the reason why I took it, is because we had that breakdown of the shoulder here. That's why I took it. So we had head and shoulders on the daily. We broke this support here. This support here. This would technically be where the head and shoulders neckline is. Rejected, rejected, came up, faked some people out, and then had a strong sell-off there. So that's why I took this trade. So there's a head and shoulders on the daily. Now, if you go look at the weekly, we're kind of forming another head and shoulders, even if you look at the 1 month. It looks like it's trying to form shoulder, head, and looks like it might be forming another shoulder. Okay. And then if you go back to the weekly chart, see this candle? If I delete this, remove. If you look at, this is a good application actually. Okay, so see this candlestick pattern here? Right here? What does that look like? This one right here, or considered shooting star. 1, 2, pretty much 3 of them right in a row. So that's kind of why I took this trade as well. So you have this on the weekly time frame. You got like a head and shoulders type deal forming. And then you have 3 shooting stars right in a row at resistance. And then you go to the daily chart. You have a head and shoulders breakdown. This is the retest right here. And what would you would call this a liquidity grab? Yes, it broke upside, but look at how hard it sold off after. This is to get the people that bought in here to basically sell out or take it for a loss, and then they just drive the price right back down. That's what market makers do. So that's why I like this setup even more, is because of that concept there. Like they stopped people out and then just drove price straight back down. And then look at the increase of volume every time, or the increase in volume over these past few days. So we had the breakdown, we had the drive the price back up, and then look at how hard sellers stepped in on Friday to push this price down. So that's why I took this trade. Okay. Next thing. So basically we're going over I hope everybody understands this. I'll go over one more part of this. So hammer, inverse hammer, bullish engulfing, morning star. Those are the patterns that I use. Okay. These are all found at support. So bearish candlestick patterns, hanging man, shooting star, bearish engulfing, and evening star. Those are the only ones I'm going to be using, or that I use personally. I also like to pay attention to these because they signal indecision. So these don't really have, you'll look for these at support or resistance, but the main concept is understanding there's indecision between these candles. So sellers and buyers are in agreement and they don't really know what they want to do. So the next part I want to go over real quick with you guys is break and retest overview. So how I use these candlestick patterns is at support and at resistance, but I'm going to go over, okay, how do I actually go about trading these? So for example, a good example that I like to use, Carvana is a good looking one. Okay, so this is on my watch list. Now I do recommend when you're going to draw your support and resistance to go to the line chart and look at it this way, because then you can see actual turning points and where price reacts and how it reacts. So, and then it will give you a better understanding of, okay, this is where I should be interested in a trade. I've preached this for a while. So definitely, if I were you, make sure that you're paying attention to that. But so basically, the concept is that of a break and retest means most people are going to tell you to buy the breakouts. I do not buy the breakouts. I don't think it's very smart, and I think it's very risky. And for that reason, like for example, Starbucks, you would have got caught in a bad situation if you tried to take this breakout here, of the breakout of this line here or this resistance. If you see how it was rejecting for a few days and then it broke out above, you would have gotten or stopped out, obviously. But basically, that's why I don't take trades like that. So some people will say, take a trade over this level or take puts below this level. I don't do that personally. I wait for basically, let's go to, we can go here. Over here. Okay, so for example, a breakout trade for me would look like prices just consolidating in this range here, right? So call this price. This blue line is price. We have resistance, and most people will say, okay, hey, take calls over 377.98. Okay, so sure, that's fine, but that's not how the safest way to take the trade. That's not the smartest way to take the trade. So basically what I do personally is when we have a break above and then we have a retest, which means we come and make sure this is support, and then we have a break above, is basically, or then this move, I would buy here and catch this move up. That's how I personally trade breakouts, or what people call breakouts. This is how I personally will trade them. So to go back to this, a break and retest strategy happens when an asset makes a bullish or bearish breakout, then retests the previous resistance or support, and then continues moving in the original trend. Okay, so for example, this is an example. You're basically trading higher highs and higher lows. So you have a resistance here or a support here. You come up, you break down below it, and then you come back and retest. So basically make sure that this level is still valid and it doesn't want to come back above it, and then you catch the move down. Same concept here for a trend line. So like if you're playing a trend line, price is moving with this trend line, it breaks below, comes up and tests this trend line, that's where I would take my entry. And I was reviewing these over the weekend and just reviewing my trades, seeing, okay, where can I even take this to another level and just become more accurate with my trades. And what I concluded is the break and retest. This is the number one setup that I want to focus on, because gives me the best entries. It gives me the best profit potential. So like if you guys took, what's a good example? CDX. Okay. So with CDX, we had a break and retest on this here. So for example, we draw support here. And what I took was, okay, we had a break above. We had a break above. This isn't a very clean chart. I think I want to find something cleaner. Okay, Amazon. We took Amazon a while back, but this is a really clean example of how we did this. Okay, so you go to line chart, weekly chart. We go here. So this was a support level, and so is this here. And basically the concept is that you want to catch the breakdown, or once it breaks down and comes back up and retests it, that's where you want to get in. So for example, that would be this move here. So when it comes up, retest this area and breaks down. So for example, the IYR trade that I took, this is probably the easiest way to understand it. Here's another example of a head and shoulders, right? I did not take the original breakdown of the head and shoulders. What I took was so this was the original breakdown. I took the retest here. So if you go down to a lower time frame and look, so this was the area of where the head and shoulders was, and this was our entry. So as you can see, when you take the breakdown, the move isn't as good. But when you catch the retest, look at the move that happens after. It's 10 times better. The move is much more significant and a lot better. Just the move is a lot better. So basically, shoulder, head, shoulder, breakdown. This move wasn't that good. It was a move from $96 or $97 down to $95.81. But okay, if you took this retest here, look at the move you had down from there. It was, if you would have caught it at the bottom of this candle, 96.48 all the way down to ultimately $93 about. So that's what we want to be looking for. So more examples that show here, symmetrical triangle. A good example of this now is CVX. So we have a symmetrical triangle here. And we had a beautiful retest of it on Thursday. Completely missed the entry though. Okay, so basically this is what happened. We had the symmetrical triangle, we had a big breakout, came back down, retested, and then we gapped up the next day. These easily went over 60% the next day on September or the monthly expirations. So you can catch very good moves based on these trading strategies and catching the break and retest. Here's another example of just a downtrend, symmetrical triangle, consolidating, break up, retest, and then move back up. And here's a good example of this that you can actually see. I know it's a little blurry. Let me know if you can't see this. But basically what's happening is price keeps rejecting this area. It rejects here, rejects here, rejects here. And then once they had to break above, we don't want to take the trade there, but we want to wait for it to come up, come back down, retest, and then break up. And I know people are going to ask, okay, so what happens if it doesn't retest? Then price isn't moving in a structural way to where you want to take the trade. You want to be in the highest quality trades. And what the highest quality trades do is when they have resistance, they come up and break it, then they come back and make sure it acts as support next. So these are the types of trades you want to take. You want to take higher highs and higher lows, or you want to take it at a lower high on an uptrend and a higher or a lower high on downtrends. So basically, for example, you want to be taking it down here, down here, down here, down here. This is where your entries want to be. And the break and retest will automatically give you that without even having to think about it. So that's one concept. Here's another example of a bearish looking example. So basically what it looks like is price is rejecting this area, right? Rejecting, acting as support. It breaks down, comes back up, retests the support, and it's at resistance. And then we have the breakdown after. So same concept. Okay, so I put this example in here because it gives you different ideas, or like, how would I make a watch list off this? Okay, so I would find a stock that might be consolidating, or there's two important prices that it's trading between. I'll show you a real life example in a second, but basically you want to have these two basically areas where price is reacting to it, and then you take the break and retest of whichever side. And that's an easy way to create a watch list for yourself in the morning. A good example of this right now, of what's happening now, is ES. I'm about to pull up. Okay, so this is, oh, here we go. Let's clear this. Okay, so take a look at this. We had a break and retest here. So price ultimately was consolidating between this level here and this level here, and was consolidating for so long in between these two levels, right? And then look at what happened when it ultimately broke. Now, this would be a perfect example of an entry where you would get long. So we go 15-minute. This is almost picture perfect, right? Like consolidating for all this time, right? Can't choose a direction. Look at if you would have bought the breakdown here. You would have got stopped out real quick. Look at if you would have took the breakout here. You would have got stopped out real quick. Look at if you would have taken the breakout here. You would have got stopped out real quick. But okay, now look at if you waited for the break and retest. Break above, come down, retest, and then you got a nice move to the upside. We'll see where we finish in the morning, but basically this looks very good. Like for long positions, calls. This looks very good. So basically how you would play this here, this example here, this is exactly how you would have played this. You would have played the break and retest of here. So the break, retest, and then your first target would be these highs, and then you'd let the play ride from there. That's how you would take this trade. Make it super simple for yourself. That's how, and look at price target is pretty much getting hit right now. This is within 5 minutes. Look at how this move was so much stronger than this move here is so much stronger. This got here, this took a few candles to get to this high, and look at this took one candle to get to that high. So price, people are getting in much stronger, and the price is moving a lot better. Let me know if you guys have any questions, but basically this is how I go about support and resistance and candlestick patterns. And also that was actually a really good application there. Look at the hammer candle we had. Hammer candle. Look at here. This is a real-time example. This happened 15 minutes ago. This is a great example of what we just went over. Hammer candle, candle here. Worked out perfectly. Okay. And then now we might be closing in even a bullish engulfing. So we keep an eye on that, right? So basically this is how you go about looking for a break and retest trade. And these are my number one trading ideas that I like to take. So for example, here's one that I'm watching this week. Actually, my favorite setup right now is definitely snow. So if we go to snow, we look at the weekly chart on snow. How we had this high right here. We came back down. If you go and look at the daily chart, we printed a hammer right off that. And basically now we're going to look for a move back to the upside. We're retesting this low, and the line chart makes it a lot cleaner so you can see it more clearly of these turning points and where it actually is a break and retest. So this is a good example. Another one is XLE. We have an inverse head and shoulders. Shoulder, head, shoulder. We broke up. Make it Okay, so this is the neckline here. See, shoulder came and rejected, head came and rejected, and then shoulder broke up, had to move up, came down and retested it. This would be our entry, and then we would be looking for a move up to here, up to $85. So this is another one that I'm watching this week. But that's really all I have for you guys. We'll probably be going into this more in depth next week about support and resistance. And yeah, we'll be going over this much more in detail in upcoming webinars. But that's really about it. If you guys don't have questions, thank you. And yeah, that's about it. I'll have this posted and the recording posted, but that's pretty much it for this class. Thank you guys for coming. No problem. Thank you guys for coming. Somebody's trying to join. We're about to end. Sorry for whoever just joined. We are just about to end here. We covered everything. So yeah, we'll go over the break and retest strategy in more depth later on. But yeah, we'll definitely be going over this more because this is definitely my favorite type of trade to take, and we'll go much more in detail with that. All right, you guys have a good night. Hope you had a good Labor Day weekend, and we will see you for the markets tomorrow.